This video will introduce you to some basic concepts of project accounting within the Microsoft Dynamics AX 2012 R3 Project Management and Accounting module. In this course, we'll look at project types, we'll look at project groups, we'll look at the setup required to post to the general ledger, we'll look at project journals and their setup, we'll explore cost and sales prices, and then we'll walk through some examples of how the project types and the project groups and the rest of the setup manifest itself with the operation of a project. Project types are a fundamental building block of project accounting within the project accounting module. There are 6 built-in project types within the module. Project groups are created specific to your implementation, and their accounting behaviors derive from their associated built-in project type. In conjunction with the project group, ledger posting setup determines the general ledger accounts that project transactions post to into the general ledger module. The project must be assigned to a project group when it's created. The project uses the project group and implicitly the project type along with the ledger posting setup to properly account for project transactions. As I said before, project types are the fundamental building block of project accounting within the project module. Project types drive the cost recognition and, in the case of externally facing projects, the revenue recognition and invoicing behaviors of a project. The project module has 6 built-in project types. There's externally facing project types, time and material projects, and fixed price projects. And internally facing project types, cost, internal, investment, and time. In this video, we'll look at examples of time and materials, fixed price, and cost projects. Later videos in the series will look at advanced topics in time and materials, fixed price, and investment projects. As I said before, the first 2 project types, time and materials and fixed price, are externally facing project types. These are for organizations that wish to be able to invoice a customer and recognize revenue for the project work. The remaining project types of internal, cost, investment, and time are internally facing and can be used by an organization for tracking of internal project work. They can't be billed to a customer, nor can they recognize revenue. Project groups derive the posting behaviors of a project as well as some of the more advanced calculations for revenue recognition. Each project group is assigned to a project type, and each project must have a project group. Further affecting the posting behavior of a project is the ledger posting setup. With the ledger posting setup, you can define mappings to the general ledger accounts in the general ledger module that the journalizing settings that you make in a project group determines. Let's take a look at an example of some of the setup that you need to go through to set up a simple time and materials project. Remember that a time and materials project is an externally facing project. So we'll go into AX, and in order to start setting one up, we need to go to the project groups. So here's where I set up the project groups. If I want to create a new one for a time and materials project, I can go New. Give it a name. And here's where I then set the project type. As you can see, we've got the built-in project types here. We'll pick time and materials. Then the next thing I need to do is set the journalizing, which is under ledger. This is what tells me where I post my costs when I post the different transactions that are built in, transaction types that are built into the system. So we have hour, expense, and item. And here I can pick whether I want it to go to profit and loss, balance sheet, and then in the case of hours, there's a never ledger, which means it never posts to the general ledger, and no ledger, which is where I delay the posting to the general ledger until I run a periodic job. So for our example, we'll pick profit and loss, and this in conjunction with the ledger posting setup that we'll take a look at here in a minute will determine what the GL account that I post to. So this is the basic setup that you need to do to create a project group that then your projects will use And there's also some advanced settings that you look at in the advanced section that will control the revenue accruals. So what we've done here, we've set up a project group. Now in order to post to the ledger, we need to be able to define what GL accounts that the project group is going to use. So under ledger posting setup, we have to determine where the cost and the revenue goes. So the journalizing options that we picked for cost then drive these things here on the side of these radio buttons. So what we need to do is we told the project group that we need to post to the P&L. So we need to define for the P&L where my costs go. So this is my transaction type for costs for hours and for expenses. And then if I want to, I can just put all and all and define a general ledger account. And for anything that posts in as a cost will go to this. In this example, we further subdivided using category groups that say project expenses, when they're posted in with this category group, would use this account. You can further divide it by project or project group. You could use funding sources if you wanted to. You could also pick individual categories within category groups and drive GL postings there. And if you want to use items are set here. And then on the revenue side, since we're doing an externally facing project, we're doing a simple T&M, which recognizes revenue on invoicing. We need to also determine what invoicing account, what revenue account we do when we invoice a project. So under here, in this example, we've set up, based on category groups, which invoiced revenue accounts these go to. So for example, project expenses post to this project revenue expense account. So we'll go back to the slide deck. So we've looked at what journalizing settings are inside of the project group. And then we've also looked at how the invoicing is driven out of the project group. And also project groups drive revenue recognition. This becomes more important when we start looking at fixed price projects. We've also looked at ledger posting setup. The ledger posting setup is driven by the journalizing settings that you make on the project group. So that drives the cost accounts. And then the revenue accounts are driven by if you're using an externally facing project group. So our costs and expense costs are set up individually. There's also work in process accounts, which we didn't talk about, which we'll look at in the more advanced module, which is where you post to the balance sheet and then bring revenue in and costs in to the P&L on a periodic basis. There's also another thing called accrued losses, which is another advanced feature. And there's also intercompany accounts. And then the revenue accounts are driven by the behavior of the project type and the project group. Revenue accounts are only relevant to the externally facing projects of fixed price and time and materials. And we have to define those for invoice revenue, which we've taken a look at. And then we also can define them for accrued revenue, which is another more advanced topic, as well as you can do WIP for revenue accounts and intercompany